Welcome to Direct Credit Funding with Jason. My name is Credit Carl, and we have Jason here. How are you, Jason?
I'm happy to be back in studio.
I got a little frog in my throat here.
Okay.
The seasons have changed, so I apologize to listeners, but we're still here. But Jason, I noticed something different. You ain't got no guests with you today.
Nope, we're doing this all by ourselves. We're raw dogging it, as they say.
Yeah, we're raw dogging. We're going to raw dog this to your bank accounts. We're going to show y'all. You know, Jason, I did actually ask you to do this episode alone because I think that sometimes we get a little bit fun, but we're here to talk business.
Okay.
And you know Credit Carl loves business. I'm always coming to you with great ideas that you shoot down, bang, bang.
Right.
So let's talk about the fundamentals of business credit. And so what I mean by that is I was at lunch with my grandpa and he's like, so what do you think Jason would say? So this is from my grandpa. He says, what's the biggest difference between business and personal credit? But he asked the same question though, because we've talked about this.
We have.
But I asked him we added this on. How and why should you focus on business credit opposed to just your regular credit?
That's a great question, Carl. First off on that, it's a balancing act of both. You've got, in order to establish business credit, you've got to start with your personal credit. You've got to build up your personal credit to borrow your first piece of equipment or whatever it is you're purchasing when you start your business. And the first thing they're going to look at is your personal credit because you haven't established your business credit. So building and keeping your personal credit in line so that you can qualify for business credit. And then it's a balancing act of keeping both of your, now you've, along with all the other operations in your business, you now need to keep your business credit also building. And I don't know how in depth you want to go on this part of the business credit.
Well, I want to go in depth for listeners because I know a lot of our listeners are new business owners.
Okay.
Because we've explained that you need to get funding and DCF is the company that's going to fund you for the business operations.
Right.
Now, if I remember right, I think you got to have 2 years of credit, right?
2 years in business.
In business. Okay, see,
in
credit
business.
card. I'm learning.
You're good. We're here for the entertainment with you.
So let's just say, now I know, I'm going to pull the curtain back. We call this the Wizard of Oz. But like I know you have some boys, they're over 18. If they came to you today and said, hey, Dad, I want to open up my own business. They want to open up, let's just say a freight line of trucks because they know that you know how to do that.
Okay.
What would you do with your personal credit? And then how would you piggyback that onto your business credit?
Okay, all right, let's stay.
From the very beginning of new credit.
Okay, let's start with the personal credit size. As an 18-year-old, they have no credit. Your first thing you need to do is to get an established credit card. More than likely, you're gonna contact financial places online to do this, but they'll give you a $100, $300, $500 credit card. Macy's, the local stores, discount retailers. It's easy to get a card for a few $100s. Pick that up as a young person and buy something at those stores and pay it off every month. That's the key.
Like the gas, you drive a car, you put gas in it, unless you're driving one of those electrical vehicles then.
Right.
Do you pay for electrical at the plug-in station?
Yes.
Okay, so there you go. So you just use it for just that. Like I think that's what I would tell little credit cards. Like, hey, just use it for gas.
Yes, you could use it for gas.
Because you're going to spend the money anyways. We call that earmarking in the business. You earmark that money to go to, in this instance, the credit card bill.
Correct.
Okay. How long, though, is that going to take?
So you're going to build that up probably over 6 months, and then once you start showing a good pay history within 6 months, you'll be able to pick up a second or third card. After you get a couple of years history with these credit cards that are going to slowly go from a few $100 balances to thousands of dollars, because as you pay those cards, the card holders are going to increase your limits because, of course, they want you to buy more things, use those cards more. So the key is to keep the money earmarked, which we just talked about, and pay those off every month and let that build.
But wait, I got a question, though.
Yeah.
Because you're not a bank, you're a funding institution. But do you want these banks to just up and raise your credit? Like if you have a $3,000 credit line and then you go to $1,000, like isn't that going to hurt your debt to, what'd you call that, debt to?
Revolving ratio, but
yes.
You've misstated the question, Carl.
Okay.
That's okay.
Pardon me.
It's okay. You're new and you're learning. They're not going to lower your credit card limit. They're going to increase it because you've borrowed $1,000 and you didn't pay it off. And so now you've spent that. As long as you're making your payments, they're going to increase that, double it by $2,000 or $3,000, whatever they decide to give you. And that's how you're going to keep getting those increases from that few $100s up to multi-$1,000 credit cards. From there, getting some type of a installment loan is the next step you need to get. That's going to be an auto loan, a bicycle loan. Bicycle loans are easy to get, and as an 18-year-old, who doesn't need a bicycle to run around on, right?
Okay.
Scooter,
I like that idea.
scooter, electric bike.
Back to the electric. There you go.
Right. Any of those things, you buy them on an installment account. It reports to your credit. What we're looking for as a entry-level business owner, when you come to us for business, what we're going to look for on the personal side of your credit is 5 to 7 years credit history, meaning your first account opened up 5 to 7 years ago, and that you have 5 or 7 trade lines open. That's the minimum, one of the minimum qualifiers for what we have.
So you want to see 5 or 7 things that we can show that we're capable of making payments on.
Yes, for a history of 5 or 7 years.
Let's just say you're doing really good at work and you get a raise and you take out one of these installment loans for that motorcycle that you wanted.
Sure, perfect.
If you pay it off early, will that hurt my credit? Or is that actually a good thing? What's your professional opinion on paying off early?
If we're to build your personal credit side, you need to show you can manage that payment for a year.
Okay.
You should keep it for a year.
Okay, so then let's fast forward now. We've done the personal stuff.
Okay,
We've
grown
done
okay.
it. We're at I'm going to throw a number out. We're a 740
Okay.
on a score.
Okay.
We maybe missed one payment because
Sure.
we were in Mexico sipping some, drinks because we were
Tequilas, there you
legal
go.
to.
Okay.
So we missed that payment, but we got it. Now I'm ready to start this Freightline company.
Okay.
What's the first thing that you would recommend to do? You need a Freightline truck.
Do you need a Freightliner? You need to have a bit of a plan.
Okay.
You need to have a plan of who.
Well, let's talk about the plan.
Okay. Why are you driving a truck? What are you going to do?
Well, I like to move furniture because I like to get my muscles big.
Okay.
So we're just going to move furniture around the neighborhood.
Okay. So you are wanting to get a box truck, is my
Yeah.
guess what you're doing, a delivery van or a delivery truck to deliver furniture from a furniture store to people. Perfect.
Correct. Yep.
Okay. First thing we need to know is how much you're going to be charging. Like, this is a plan you need to have.
Well, I found a truck for $18,500.
Okay.
But my business is new, though.
I know.
If I remember right, I can't actually get a funding loan on a brand new business because it's not been 2 years.
We do have specialty programs available.
Ooh, tell me.
Those are for startups. Those are for young businesses like yourself.
So how's that work then?
So on that, we're going to limit you probably to $25,000 to $50,000 of worth of equipment. It's going to be based off of your personal credit history, which you've clearly done a good job. If in this example you've got a 725 score and you've got 5 years history, we can see you've managed your debt well. And so yes, we will loan you your $18,500 for the truck. And let's just say that payment's going to be $600. I'm just going to grab that.
Woo! That seems awful high, but I guess I do need the truck to work.
You do, and you're paying a higher rate with your being a startup too. That's just a reality of the business.
Yeah, I'm glad you said that, Jason, because I do remember you saying one time, like, when you are a new credit person, you should have that expectation that your interest rates are just a little higher than the normal person, like a mom and dad, right?
They are. Your interest rate is going to be higher as a startup, and that is just purely a fact that half of all businesses that start fail. There's a 50. It just unfortunately it is, and so everyone has to cover the ones that don't make it. That's just nature of the risk game.
So one of the questions that my grandpa and I were talking about at breakfast, he was saying, well, if you use your personal credit and then move over to a business credit. Let's just fast forward this conversation.
Okay.
I'm 2 years into the business now. We'll just say 3 for funsies.
Okay.
And I'm doing really well, but I really need 3 more trucks.
Right.
And I maintain a 700 credit score
Okay.
on the personal side.
So that business loan that you did with us for the $18,000 box
Yes, let's
truck,
just say I paid that off.
Sure, you
Can we
paid it
just
well,
say-
paid it up. Yeah, you paid it well. You did exactly what you're supposed to do. We can see you've done that. You need how many more trucks? 3 more trucks?
Well, I'd like 3, but 2 would be sufficient. 3
Okay.
would just help me, I think, grow bigger.
I don't see any issue with your excellent pay history. I don't see any reason why we wouldn't give you that loan for the additional trucks.
Yeehaw! I like that. I don't know why I got a little
Especially
country twang today.
considering you've paid us well for a year. Why wouldn't we extend another? I mean, that's what we want you to do. We want you to grow your business.
And one thing I remember, I think his name was Alex. He said that when he was on an episode a few ago, he said that he really, really, really liked repeat customers. So you want us to come back to you.
Yeah, we already have the relationship, we have the history, we know the stories, we know what's happening in their business, we talk to them all the time, and they're the best customers for everyone.
And this goes back to the very first episode we ever had to Jason. That was many moons ago.
What's that?
Where you said we're family. DCF is family. That's what makes you different than a bank.
That is true.
You care. You want to see these vehicles on the road, you know?
We do. We care. I was at a big national bank, because we can't say the names, and literally going in for, you can't go in for a personal banker anymore. All the tellers do all the jobs. I want to talk to them about my ATM fees and wire fees and things like that. And they're just like, oh no, you got to schedule an appointment. We all have to do this job. I mean, it's just this big, and I literally am in there, I'm like, you are making me want to leave your bank. I have 4 other banks asking me to come over, and you were making me want to leave.
So the banks are missing that personal touch.
Absolutely.
Where DCF has kept that personal touch in, which leads me to your Instagram. Your agents are live on Instagram now.
They are.
So if you have questions, they're there. You can slide into those DMs, wink, wink, and you can ask them whatever funding question you have, and they're going to ask. So real quick, I got one other question for you here. And I had a few, but you actually answered all of them, but just the one question. You're smart, Jason. But here's the question I want to ask you, if we can get a little bit more detailed here.
Yeah, please do.
What role does business structure play in financial options? And are certain structures more favorable for credit approvals?
You're generally going to have 3 options. You're going to be a sole proprietorship, which is just operating under your individual name with a DBA, Mary Smith doing business as Mary Smith Cookies or something like that. Next thing you're going to be is a LLC, Limited Liability Corporation, or a corporation. Those are generally the 3 options that a young business or any business is going to do when they start. What's really important, that's really important to me, is that you actually file the paperwork to start. Whether it's a sole proprietorship and you file your doing business as, or your DBA paper, or fictitious name filing as it's also called, or you file your incorporation paperwork or your limited liability corporate paperwork, that's what triggers the clock for your time in business. So everyone, my best advice to a young business, get your business license or file your paperwork. That's first step. That's what any lender looks at to see, oh, I've been running a business. Because a lot of people think they don't need to file they can just file a Schedule C on their taxes, because that's what shows their sole proprietorship income. But that only dates you to the year. Credit likes substantive proof that you did open, and we don't know when you opened in that year, so we're only going to give you credit even if you opened in January. Unless you can prove to me you opened in January, we're going to be like, well, you could have opened anywhere between January and December. We're going to qualify you as a December because we don't know any better, and that hurts your chances of getting approved, especially as a young business.
And Credit Karma knows this. When you need to get those papers that say you're an LLC or an S Corp, usually your city or state or your county, depending on where you live at, will have all that paperwork. And then once that date's stamped on there, that says, hey, we're legitimized, as they like to say in society, right?
Yeah, in fact, yes, it's easier than that. Sole proprietorship, almost all these forms are available online. And there's lots of services that do them for you and file them for you. You can have a filing done within 5 minutes online.
Well, Jason, it's been fun. Can you tell the folks where they can see you at and ask those questions?
They can find us at the directcreditfunding.com website. They can find us here on the channel at Direct Credit Funding with Jason. Please subscribe and hit notifications. You can reach us at 888-844-7676 and on Instagram, Direct Credit Funding.
And remember, when you need funding for your business, reach out to my friends at DCF. They'll help you out today. Until next time, everyone, we'll see you later.